Hey everybody, it's Tim and Eric over here with DeYoung Properties, and we wanted to take a second real quick to just say thank you first and foremost for allowing us to share a little bit more information with you. Today we've actually got a little bit of an exciting topic. We're actually sitting here with Doug Edwards from DeYoung Mortgage, our own in-house lender. So we thought we'd just ask more of a Q&A type of style interview today just to kind of see what the current market is trending to. So Doug, thank you.
Welcome. Good to be here.
What are the financial programs that you're offering right now, and what can a buyer do to take control of the volatile market?
Okay. So as far as the programs that we offer, I can tell you that absolutely the number one program obviously is the 30-year fixed rate conventional mortgage. We do have the ability to do jumbo loans as well if you're over the conforming loan limits, but the majority of our borrowers are in that conforming loan limit. When you do that, you do enjoy the better interest rates. A conforming loan does offer better interest rates than a jumbo loan. In addition to that, we have helped many veterans, and we are always happy to do that. We do have VA loans that are available. That's a tremendous benefit for a veteran. And when we do get someone who falls into the category where they can do an FHA loan, and FHA loans, $420,000 limit for loans, and most of our loans are outside of that limit. But should they fall in there, then FHA is also an option as well. But mostly that's what we really perform in, and is the conforming loan, 30-year fixed. You can get a 15-year if you can afford that and you qualify for that. And then the VA loan and the FHA loan we do as well.
So it definitely sounds like it's something that I know we say it every day, and we say, we encourage people to make that move now and to move forward while we can, while technically the market's still hot.
Correct.
It definitely sounds like it is beneficial to get on top of it because the current projections are aiming to last. I mean, it's not going to be an overnight change. It sounds like it's going to be a long-term change, and it's going to take us a while to get back down to that margin of 2% for that inflation rate.
Correct.
So in terms of somebody coming in and buying now, what are our options in terms of locking in an interest rate or even taking the opportunity to buy points down so we can work that rate into something that's a little bit more comfortable for the buyer?
Right. So if you're looking right now, with DeYoung Mortgage, we do offer up to a 6-month interest rate lock. You do need to keep in mind that the longer period of time that you lock, there are more expenses to that. It does cost more to do that. My suggestion would be we're tremendously fortunate that, DeYoung Properties, the builds seem to take less time than some of the other builders out there.
Right.
But if you're looking at an 8-month type of build, then my suggestion would be you come in, you get pre-qualified. Once again, I said 6 months is the lock period that we currently can go out to. So you would get pre-qualified, and then a couple months after that, you'd be checking back in with us. We'd be checking back in with you, and to say, does it make sense at this point to lock your rate for 6 months?
Correct.
The thing with that is we need to make sure we are coinciding with the builder on when they're going to be able to actually close this loan, or this house is going to be complete. And the reason why I say that is you do not want to run into a situation where you've locked a loan and then that lock expires.
Right.
There are expiration fees. They're a per day type of fee. And that's why working with DeYoung Mortgage, we work closely with DeYoung Properties and with the builder to get a more accurate construction close date of when this is actually going to close, and that helps out a lot. But as far as anything further out than that, as locking further out than that, we don't know. I mean, a year from now, interest rates may have settled back down. We do not want to see borrowers paying extra for something that they don't necessarily need to do.
That makes sense. Yeah, definitely. If you can do a 6-month rate lock and you're comfortable with the build time frame, why pay extra for your rate lock when it's truly unnecessary? That's
correct. And once you lock, you lock. I always tell our borrowers, and locking in a loan is one of my favorite things to do.
The buyers
whip it up and go, hey, you got a great rate. But I always just say, lock and walk, lock, and then I will have some people call the next day that they lock. Doug, what did it do today? No, you locked your rate, and it was a good one, and you just got to say, that's it. I'm done with that part, and whatever you're hearing or whatever happens later on, you just got to say, I've locked my rate. Now, that being said, if you are within 15 days of closing your loan and there is a certain improvement in the rates, there is a one-time float down option. And we always kind of look at that with the lender. Is that available? Have the rates gone down enough for somebody to be eligible for that? Tim, you mentioned buying down your rate. Okay, so there's a couple of different definitions to that. It's not really a buy down. A buy down is something where you heard the term 2-1 buy down, 3-1 buy down. That's more of a permanent type of buy down where you pay X amount of money up front to have your rate be one way for 1 year and then another for another year. What we do is it's actually called discount points. There's points. So when you look at rates, and let's just give an example today. So let's say that you are looking at a 5% rate, and that 5% rate, to get that may cost you $2,000 additional dollars in closing. And then a 5.5% rate may only cost you $1,000 in closing. And there's also options where you can pick a rate and the lender then actually gives you some credit back. Right. So that's called bonus pricing, if you will, or discount pricing, where you actually rebate pricing if you actually get a rebate. So there's lots of different options. With us, you don't pay any fees up front to lock in a rate. It's all done at closing time to get a certain rate.
So one of the biggest questions that we are getting right now is essentially what's going on with the interest rates?
Right.
We all want to know, Doug.
Well, they have increased and a little bit more, I think, than the market expected in a short period of time. However, when you look at the entire time the interest rates have been around, everything still is relatively low, right? We don't have record-setting rates that we had a few months back. However, hopefully they settle down here, but at some point, when they do settle down, you are going to get a more, I think, normal average rate that historically has been. I know a lot of people say this, well, I bought my first home at this. I did buy my first home at 11% interest rate. And I don't want to scare anybody to tell you that that's what it's going to be. Yeah. But you will always hear, people especially been around a while like me say, yeah, hey, I did buy my first home and the interest rate was high. The Fed obviously increased the interest rate this week by 0.75 points. And that was on top of another 0.5 point increase that they did recently as well. One of the things that I think is important to know is when you hear that, or when the Fed does make that kind of announcement, let's just say the rate is 5%. That doesn't mean that tomorrow the rate is going to be 5.75, coinciding with their increase, their 0.75 point increase. My experience, and actually this happened this week, is that lenders foresee that the Fed is going to make these increases. So what lenders will do, rather than a shock value, if you will, of it just leaping all in one day, they already start to hedge those rates up. And many times what will happen is when the Fed does make their announcement, then the lenders know, okay, this is what they did. And I've actually seen rates then improve over the next couple of days after that, because they had pushed so much upward. So if you're a buyer out there and you're looking, don't panic and don't say, okay, they've raised the interest rates today and I didn't lock in yesterday. They oftentimes will actually improve. And like I said, we're hoping that they kind of like stabilize out here a little bit. As I think everybody has heard them make their announcements, their goal is to get a hold of inflation. That's what they're doing. And I was listening to someone yesterday that was talking about, what is their goal? Where does it stand right now? And when will this stop? Probably not anytime soon, because the inflation rate right now is 8%, and the target for the Fed is 2%. So that's quite a ways that we have to get the inflation back under control, and increasing interest rates will be part of that. We all know that, and that's what the announcements have been.
Thank you so much, Doug.
Thank
It
you.
definitely sounds like it's something that, in terms of us being able to work so close hand in hand together, it's
Mhm.
something that you at DeYoung Mortgage are going to remain diligent on in terms of watching that timeline and to seeing for our customers that now is a good time to lock that in. You've already kind of ran that scenario on the backside to say, hey, is this working for you? If so,
Yeah.
let's take advantage of that. So that's one of the benefits of actually using that in-house lender.
Yeah, and when we do a pre-qualification, or no, it's a pre-approval, we actually do go to what we think is a worst case type of scenario. Okay, so what we don't want to do is, today, June 17th, say, we're qualifying you at a rate of 5.5%, let's say, and let's say when your property is, or when you're within that 6-month period, all of a sudden, no, we can't get you 5.5%. It's going to be 6 or 6.5, and now you don't qualify. So what Elizabeth and I do, and Elizabeth's my partner at DeYoung Mortgage, we will look at that and try to give our borrowers a worst case type of scenario where if the rate does get to that, you can afford this payment. You qualify with this payment. We also do give an estimate of what it's going to take to close your loan, as far as fees and all of that. One thing that I want to add, we get this question a lot. Closing costs to close your loan. It's not just about your escrow fee. It's not just about, once again, if you pay points to lower your rate, origination fees, whatever. A large part of what you're going to see on your estimate and closing costs is property tax, prepaid interest, and your homeowner's insurance. None of that stuff can I control, you control, or anything, but that's part of closing. We get that question a lot. Once again, what DeYoung Mortgage does is we give you all of the elements of the loan. This is every single item that you're going to have involved with your loan. We don't just give you an estimate of, here's your principal and interest, tax and insurance payment, and here's just, some minimal closing costs. No, we want you to know and have a great idea of what it is that you're going to have to bring in to close that loan when you're ready.
That's actually a good point too, because it actually brings me to my next simple point, is the fact that with using DeYoung Mortgage, we do offer different in-house incentives as well. So it does change from community to community and home site and floor plan, but it is definitely something that we do direct directly to the closing costs. So when you do get that itemized fee workup from DeYoung Mortgage, you are seeing the total amount that is essentially owed, in a very close estimation, of course. But you can rest assured that there is that incentive to utilize towards those closing costs.
That's right. And one of the things that you do need to keep in mind is whatever incentive that the builder gives you, that cannot help you with your down payment. Okay, so what you're going to put as far as your down payment, that's your money. You have to put your own money into the down payment. The incentive helps you with your closing costs. And certainly you can use all of that incentive or part of that incentive to pay points and buy down the interest rate. People do that all the time. The other benefits of using DeYoung Mortgage is that, once again, I think I alluded to it earlier, we work very closely with the builder. We're their affiliate. And that being said, you can use any lender that you want. We can't steer you one way or another. You can use any lender that you want. However, if you use us, you do have the added benefit that we are meeting every week regarding your property, regarding all of our pipeline and properties, and DeYoung Mortgage is part of that. And now we have an idea when this thing is going to close, when your loan's going to close. Some of the times when somebody uses an outside lender, this is where an issue comes up, is they're not that much in tune with the builder. So we do tend to be right at, or we might be missing some closing times or whatever. And that's just not a situation that's great for you as a borrower. We also are very personal in our approach. It's a very, very one-on-one. Elizabeth and I have the ability. We take the time to actually communicate with you. We're available to answer any questions that you might have. I think that's another real good added incentive for using us as well.
We really appreciate that too, Doug, because I will tell you that from a coworker perspective and also a customer perspective, myself and Tim have both gone through DeYoung Mortgage, and we had a very good interaction. And I really thank you and Elizabeth for that. One thing I was going to mention too, just real quick, the Avid surveys that are scored by the customer. Industry norm of the top 10 builders is actually 92%. Doug and Elizabeth achieved a 94%, which is phenomenal. So I applaud you on that, my friend. And I helped with that survey score.
And didn't we get something from the Fresno Bee? We got the best, voted the best.
Yeah.
So number one, yeah. Woo-hoo-hoo. Yeah. So anyway, I think I believe the reason why we continue to get really good Avid and customer experience surveys is just what I said. We are able to speak with you, answer your questions. We constantly get rated very high on, was I prepared to close the loan? And the answer is yes, 5 out of 5. And we don't want you to come in and have any surprises at the end. That's the worst part of borrowing, taking out a mortgage, is if you have a lender or loan officer that, hasn't been upfront with you and once again disclosed to you all of what it's going to take to close this loan. So time and time again, our borrowers come in and they will know what they need to bring in, and there's just no surprises at all. We do have the benefit that we use a outstanding individual who's our notary, and he helps explain the process as well. And we usually do it here in our beautiful conference room here at our main office. However, when you do sign your documents, we have signed people at their homes, at Starbucks, at McDonald's, in their businesses, after hours. So, real flexible there. But again, that's communication that Elizabeth and I at DeYoung Mortgage are able to do and give you that I don't know is available all the time with some of our competitors.
Right. Thank you so much for that, Doug.
Thank you so much, Doug. We do appreciate your time. Thank you for allowing us to kind of pick your brain and gather that information from you. So I know it is beneficial for everybody out there who is going through the process of building their new home. And again, we thank you from the bottom of our hearts, from our family to yours, for pursuing building that dream with DeYoung Properties. So thank you.